Hello, and welcome to another episode of Payroll Around the World. I'm your host, Louisa Rolandhagen. This audio series is your in-depth guide to exploring the intricacies of global payroll. Each episode spotlights a specific country and features interviews with ADP experts on the ground, as well as locals who share their perspectives on work and pay in their homeland. After all, payroll can't truly be global if it isn't local as well. Today, we're heading to Hong Kong. The Special Administrative Region is one of Asia's most dynamic business hubs and famous for its imposing skyline, bustling street food scene, and its strategic position as a gateway to mainland China. The region's robust service economy and its identity as a financial powerhouse have shaped everything from its workforce to its payroll processes. Hong Kong's location defines its unique identity. The bustling port city has placed its mark on the world thanks to its financial sector, and world-class transport links have long made it a landing point for multinational companies looking to expand in Asia. Despite ongoing competitive pressure from nearby economic centers like Singapore and Shanghai, Hong Kong continues to attract talent, capital, and enterprise. But this appeal also creates challenges for the region. The territory only encompasses just over 1,000 square kilometers, so just under 400 square miles, but contains over 7.5 million people. This makes Hong Kong the fourth most densely populated region in the world. As such, housing and other living costs are expensive, with short supply creating much higher prices than compared to mainland China.
The high cost of living has a significant impact on employers' talent attraction strategies. So when recruiting cross-border workers from the mainland, employers will also consider their salary level in the mainland and try to offer a certain premium to ensure that the income of the employees can meet their living cost in Hong Kong.
For employees, the Chinese city of Shenzhen, which is right across the border from Hong Kong, is an appealing option for those looking to get more square meters for their money.
So because the rental in Hong Kong is quite high and just keep going up as well. So I'm looking for the alternative in Shenzhen.
The rise in cross-border workers also means that employers need to navigate different regulatory requirements for their employees depending on where they live.
No matter you are cross-border workers or you are working in Hong Kong locally, you need to follow the local legislation. It's based on where the employment contract is signed. And for example, if you are signing an employer contract in Hong Kong, then you definitely need to follow the Hong Kong government legislation part. And if you are signing a contract with China mainland, then you are focusing on the China mainland social benefit related part.
We'll dive into all of the details in just a few minutes. But first, I'd like to introduce our ADP experts for this episode. Hi, Jenny and Harry. Thanks for joining us. Would you like to introduce yourselves?
This is Jenny Sun speaking. I am working as the service director for Hong Kong payroll, focusing on local solution. And currently, we are serving over 400 clients in Hong Kong market.
My name is Harry Chen. I'm the service director managing the multinational clients in the Asia Pacific region. So Hong Kong is one of the markets I'm supporting.
I'm looking forward to hearing your thoughts on payroll in Hong Kong. Let's start with an overview of the current economy and labor market. How would you describe it?
So overall, Hong Kong's economy is very positive. Historically and naturally, Hong Kong is the connect between the international market and the mainland market. So it is a place always where the international fund, the talents, and the multinational companies gather.
On top of Harry's part, maybe I can introduce more on the labor market part. Hong Kong has a population around 7.5 million, while labor force is about 57% of the total population. And in Hong Kong markets, it has a pretty low unemployment rate.
And in terms of the search for talent, what sectors are particularly focused on recruitment right now?
So the finance industry has a strong demand for talents in the traditional areas. There are a lot of investment banking, wealth management, and also risk control, these traditional strong areas in Hong Kong.
I'd imagine that employers are therefore increasingly investing in benefits, such as housing allowances, private health insurance, and flexible work arrangements to attract and retain talent, particularly in the face of ongoing competition from cities like Singapore and Shanghai.
We see the overall package, the salary also increasing competitively in this region. So overall, the median annual salary for the financial industry is about 600,000 Hong Kong dollars. And the annual salary, if we are looking at those senior positions, executive level, it can exceed 2 million Hong Kong dollars.
But the cost of living in Hong Kong is also famously quite high, right?
Of course, we all understand that the living cost is famously high in Hong Kong, but what we should look at from the two sides. First, of course, it means the attractiveness of Hong Kong to those cross-region and international talents because of those career development opportunities and the high-end positions it can offer. But yes, you're correct. The high cost of living has a significant impact on employers' talent attraction strategies. So we're recruiting cross-border workers from the mainland. So we see in several areas that the employers' strategies are changing. So first, we see that the employers, they tend to provide more attractive salary and the benefits systems to the employees due to the high cost of living in Hong Kong. So we're recruiting cross-border workers from the mainland. Employers will also consider their salary level in the mainland and try to offer a certain premium to ensure that the income of the employees can meet their living cost in Hong Kong. So this is something will add more cost to those cross-border talent attraction. Secondly, the employers also, we see more and more employers, they try to provide the housing subsidies to their employees to support them to settle down in Hong Kong, because the housing costs is a major expense to the employees in Hong Kong. To relieve the pressure on employees' housing, more than 50% of the employees, when they are trying to seek a job in Hong Kong, they expect to receive housing subsidies. And some employers, they directly provide housing allowances, while other companies, they will cooperate with those real estate companies to provide employees with the preferential housing rental or purchase options.
Right, so it sounds pretty similar to the Housing Fund program in China. I'm also glad you mentioned cross-border workers, because we will be getting into that in just a minute. But first, I'd like to talk about some of the unique aspects of Hong Kong payroll. One of the most important facets of payroll in Hong Kong is its territorial tax system. Can you two explain this to me in more detail?
It is something very different from the mainland because Hong Kong follows a territorial tax system, meaning only the income earned in Hong Kong is subject to the taxation in Hong Kong. So both the employers and the employees have their own tax-related responsibilities. So especially to employers, because that part is important to those companies, they want to have business in Hong Kong. So employers in mainland have the reporting obligations. So at the end of each year, the employers in Hong Kong will be required to file an annual employer's return with IRD, the Inland Revenue Department. This return will provide details of all the employees, of their remuneration and their other relevant information. And the employer's return must be submitted to the IRD within 1 month of the end of the tax year. Here, the tax year for Hong Kong is from April to March. And also the salary tax in Hong Kong, there are two ways to calculate the salary tax in Hong Kong. The employer can either use a progressive tax rate ranging from 2% to 70%, or a standard tax rate of 15% to calculate the salary tax for the employee. So there are also multiple allowances, such as the basic allowance, the married person's allowance, and also child allowance, which can further reduce the individual tax burden for the employee in Hong Kong.
Right. And I also read that employers need to submit a particular tax form called the IR56. What can you tell me about that?
So when you have a new starters in the company, you need to register in the government with IR56E submission. This need to be completed within 3 months after the onboarding of a new employee. And then if you have someone who is going to cease employment with this employer, and then as an employer, you need to submit IR56F, for example, to IRD. Yes, that needs to happen 1 month before the employee's cessation of the employment. And also, if someone is living in Hong Kong, you need to submit IR56G. That also need to happen 1 month before the employee's expected date of departure. So there are different rules related to different forms. So that is also a complex part of Hong Kong legislation rules and where we see a lot of our clients need support from us.
So there are different variations of this form that employers need to submit, depending on new hires, departures, or tax clearance situations. I imagine this can get particularly tricky in industries with high turnover rates, such as retail.
I just want to answer that question about the retail because we do have a client that is a very, very large retail client based in Hong Kong. So it is actually also a very big challenge to us initially when it was firstly set up because of the industry special situation that we do see. It has a very high turnover rate by month. Usually it also operates in a very special way that it has maybe more than 3,000 stores in Hong Kong, one single location. And all those more than 25,000 employees, they are working actually in different stores. And sometimes they just change the working location from one store to another. And sometimes a lot of people, they just leave the company and also new hires a lot. So that's why, because the Hong Kong regulation requires that all the final payments need to be paid within 7 days post the employees left. So it actually requires us to provide not only, because if we only need to meet the legislation requirements, we need to arrange maybe the offsite call to process the termination pay for every 7 days. But for this client, we need to arrange more frequent final pay cycles. In real situation, it is daily. We need to daily receive the list of the employees they leave the company, and we need to arrange the payments within the same day, within several hours, to complete all the data input, the calculation, the reports, and also the bank file transfer, everything within several hours. So we have a very highly efficient and robust system and customized for this client to create some program to support this flexible calculation so that we can support this daily termination payment calculation and payout successfully. So this is also operates and works very well today.
That's a great example of ADP tailoring its solutions to meet its clients' needs for an irregular payroll cycle while still remaining compliant. One aspect of Hong Kong payroll that comes up again and again is the Mandatory Provident Fund, also known as the MPF. It's Hong Kong's core retirement scheme. What do employers need to know about this?
So the Mandatory Provident Fund, or we call it MPF, actually it is a comprehensive and complicated scheme that the government, they designed to help to ensure all the employees, they can get the pension and the support after they retired from the position. So it serves as the core part of Hong Kong's multi-tiered retirement security framework. It is designed to provide a stable financial foundation for the Hong Kong working population after retirement through a mandatory contribution and a long-term investment appreciation. So the coverage, first, it has a mandatory participants. So generally speaking, all the employees and also the self-employed individuals in Hong Kong aged between 18 to 64, they must participate in the MPF. So this includes all the full-time employees, part-time employees, and also those daily wage temporary workers are all included. the exemption only for those domestic helpers working in employers' residence, and also those self-employed hawkers, and also civil servants that covered by those statutory pension schemes, and also for foreign workers. If you are foreign workers, you work in Hong Kong, you are exempted from the MPF participation in the first 13 months. But after the 13 months, starting from the 14th month, all the foreign workers also need to be participated in the MPF. For the contribution rules, it is quite straightforward. So both the employer and the employee, you each can contribute 5% of the employee's relevant income every month. And also the monthly income subject to contribution has a cap between 7,100 Hong Kong dollar to 30,000 Hong Kong dollar. The employers has no such exemption and must start the contribution from the first working day of the new hired employees. And besides the mandatory contribution, there is also a voluntary contribution. So the employee and the employer can also make additional voluntary contribution based on their additional agreements on this.
So, how are the funds that are held in the MPF managed?
The government use many trustees because Hong Kong is a financial center.
What do you mean by trustees?
These trustees actually are those famous finance companies. They are authorized by the government or by the MPF authority to manage those MPF funds for those employers. So basically, the employer can select one or several or from these trustees, usually like some famous brands like the AIA, the HSBC, Manulife. These are all the trustees, they operate in Hong Kong. And also each trustee, they have different schemes or plans they provided for the employers and the employees to select. The MPF authority is responsible for the regulating and the supervising the operations of all those MPF schemes. And the funds in MPF accounts are invested in various portfolios selected by the participants. Usually these are the low-risk money market funds, the guaranteed funds or medium-risk bond funds. And also we see that in recent years, the MPF is continuously improving its system. For instance, the MPF has launched a new policy in May 2025 that abolished the previous MPF offsetting arrangements, which means that from now on, the employers, when they are paying the long service pay or the severance pay to the employee, they can no longer offset those mandatory MPF contributions they have paid in the past. So in this way, it is also better safeguarding the employees' benefits and interests.
I just want to remind all the employers about the MPF payment time. So the MPF payment of the current month need to happen before the 10th of the second month. It might vary due to different holidays, but normally it is around the 10th. And if you have a late payment fee of MPF, 5% of the amount of your contribution, employer need to bear the penalty. So the employer will bear both the employee and employer's portion of the late payment fee, and trustee will pay the full amount of the late payment fee to the delinquent employee. So that is very important reminder for the employers.
So it's important to adhere to the deadlines. I was also reading about another type of retirement system called the ORSO scheme. How does this differ from the MPF?
MPF was introduced first in 2000, but before that, with the Hong Kong's economy has been developed with a very high speed in the 1960s and the 70s, more and more employers, they start to provide those voluntary retirement schemes to attract and retain the outstanding talents. So which lead to the foundation of this also, because the meaning actually is quite similar like the MPF. That is also, there is a standard contribution from either the employee or employer or both. So this ordinance established a registration system for those voluntary occupational retirement schemes, and the marking, that is the starting point of the ORSO. The ORSO actually only provided by some employers, some leading companies. So its coverage is not that wide. So with the aim to have a more wider coverage for more populations to all those maybe self-employed talents, the government introduced the mandatory MPF in 2000. So the also, which was purely voluntary, began to be gradually replaced. Of course, today we see that still there are some companies, they continue to offer the also schemes, but we see more and more companies, they are switching to the MPF.
I see. So the main difference is that the MPF is a mandatory government regulated retirement scheme, while ORSO, which stands for Occupational Retirement Schemes Ordinance, is an employer driven, often voluntary scheme that was in place before MPF. And MPF contributions are mandatory for both employer and employee, whereas ORSO contributions can be made solely by the employer or jointly. Another reason for ORSO being phased out is the digital advances being made with regards to the MPF system. A new eMPF platform has been introduced, and it's meant to streamline all MPF administration from contributions to reporting under a unified government-managed digital system. What can you tell me about this?
Currently, we have several trustees running in Hong Kong market. I think roughly around 20 trustees. Basically, each trustees have their own different forms for new enrollment and different reports required for submission. So based on this, Hong Kong government is onboarding all these trustees on a new platform that is called the eMPF. Yeah, the purpose is, of course, to standardize all these enrollment forms and reports, which make it easier for both employee and employers.
Is this a reflection towards a broader digitalization trend?
Yeah, recent years, we see Hong Kong government is working a lot on digitalization. From several years ago, for IR submission, this is basically for the submission to the tax bureaus. It's become digitalized. Before this digitalization, all these IR forms need to be signed and then printed out and then submitted to IRD physically. After the digitalization, it starts to support e-filing. Basically, from a software company or a service provider like ADP, we can export a XML format. And using this format, we can submit online to IRD website directly. This is very convenient for employers and also for service provider like us. And recently, we also see that the government is working on this eMPF onboarding. So we believe that Hong Kong government is planning a lot of these digitalizations.
Good to know. So the MPF covers retirement. What about things like health insurance?
Actually, in Hong Kong, there is no such statutory required health benefits, but most employers, those are managed more by the commercial insurance schemes provided by those insurance companies. So usually this is also provided as an additional benefits to the employees to support them, especially when we have this kind of cross-border or those foreign international talents to be attracted to be working in Hong Kong. This is an important benefit that could be offered by the employer.
Okay, so it's managed privately, and there are no mandatory government contributions from employers. I want to steer the conversation towards the topic of cross-border workers, which we had previously touched on before. Hong Kong's proximity to Shenzhen has made cross-border commuting increasingly common. It's also pretty quick to commute between the two, isn't it?
I think one important factor is recently the government has also invested a lot in this public transportation for this kind of workers. For example, the high-speed train from Hong Kong to mainland China, it only takes about 15 minutes. So that make all these flexible working hours, cross-border transport workers possible that they can easily handle to live in mainland China and then to work in Hong Kong.
That's a much quicker commute that some who live and work across 2 zip codes need to undertake. To better understand what cross-border work looks like on an employee level, we spoke with Edmund, an independent financial advisor who lives in Shenzhen but works in Hong Kong.
I was born in Malaysia and then I was grew up there. And then I just complete my university in UK. After that, I just moved to China, Shanghai, Beijing for my working life. After that, during the COVID time, I was moved to Hong Kong and then I just started my career here 3 years ago. I come back Hong Kong just because I have two citizenship in Malaysia and Hong Kong as well. So there's a convenience for me to move back to Hong Kong and then easy for me to find a job here. And then because my majoring for the academic is accounting and finance, right? So since Hong Kong is an international financial hub, I looking for the financial job here.
Edmund told us that he moved to Shenzhen in early 2025 in search of more affordable rent.
So because the rental in Hong Kong is quite high and just keep going up as well. So I'm looking for the alternative in Shenzhen. So I rent an apartment there for 3,500 renminbi and then for 300 square feet. So it was quite a good deal actually.
I'm just going to interject very briefly to explain that renminbi is the official currency of China. You may be more familiar with yuan, but that's actually a unit of the renminbi, although they are used interchangeably. Back to Edmund.
In Hong Kong, it's very hard to do that because in Hong Kong, if you get a same size of apartment, maybe you need to get the rental for 10,000 Hong Kong dollar at least. So that's why I have to look for alternative to save my living costs.
But it's not only rent that's cheaper.
Actually, it was quite convenient, especially the food. The food there also quite cheap. And then maybe I'm lazy to go out to have a food, right? So I can call for the food deliveries. And then the price is quite significant cheap compared to Hong Kong. And then sometimes I think the infrastructure in Shenzhen as well is quite developed. So everything is quite convenient and then quite useful for the society and then to use all the facilities there. So compared to in Hong Kong, I mean the facility in Hong Kong right now is quite old and then not furnished quite well.
Edmund has many options for transportation when it comes to commuting between his home and his office in Harbour City in Hong Kong, including a high-speed train, a regular train, and a bus. His typical workday doesn't sound too different from what most office commuters do on a daily basis.
Usually I will wake up around 7 a.m. and then I will take a bath and then change the clothes and then I will go out from my Shenzhen house around 7:30 a.m. So I will arrive in office around 9 a.m. between 9 a.m. or 9:30 a.m. because my office requires me to attend here by 9:30 a.m. So there's time for me to travel. After the office hour in Hong Kong, right? So usually I will work OT or maybe I will meet client at night, right? So I will travel by bus and then go back to Shenzhen.
His flexible working arrangements also allow him to work from home for a certain number of days.
My job is not required to attend in the office daily. So I just need to come here for 3 days per week. Maybe maximum is 4 days. And then the rest of the time I will base in Shenzhen so I can work from home. So there's no much challenge for me.
When it comes to taxes, Edmund does have to adhere to certain rules.
Basically, I'm paying tax in Hong Kong right now. So there's a rules when some residents not staying in mainland China more than 102 days. So you are not entitled to pay tax in China. So there's a rules inside a year. So there's accumulation period for 182 days become a tax resident. So because every day I need to travel and then commute between Hong Kong and China, right? So because in the morning I travel to Hong Kong and then I stay until nighttime, maybe 12 hours in Hong Kong and then another 12 hours in Shenzhen, maybe I go back and sleep only. And then the other days is keep repeating the cycle. So there's not calculating one day as 24 hours.
China determines tax residency largely based on how many days an individual resides in mainland China within a tax year. It's 183 days, actually. China also has special arrangements for Hong Kong residents working partly in mainland China. If a Hong Kong resident works in mainland China fewer than a certain number of days, they may be exempt from paying mainland China income tax on income sourced from Hong Kong employment. Since a day is counted only if you are physically in China for more than 24 hours, China's administration allows for 102 days as the threshold for this arrangement. Many of Edmund's calendar days in China therefore do not count as China tax days, because he enters Hong Kong in the morning, returns to Shenzhen at night, and doesn't often stay in China for 24 consecutive hours. This allows all his income to be taxed solely in Hong Kong at much lower rates.
The Hong Kong tax rate for the personal tax is quite low compared to China. The tax rate, the highest one is 45%, and in Hong Kong is 17% only. There's a difference.
When it comes to Social Security contributions, Edmund is also exempt from Chinese contributions and only pays into the MPF.
Right now, I only contribute for the MPF in Hong Kong. So in China, I didn't contribute anything because unless I have a job in China or I establish a company there, maybe I need to do some business. I maybe need to doing some social contribution in China.
I wanted to know how these kinds of cross-border arrangements affected the tax processes of employers. So I went back to Jenny and Harry to find out more.
It is mainly handled by some consulting firms and this kind of taxation part. From our side, as a service on payroll, what we see is no matter you are cross-border workers or you are working in Hong Kong locally, you need to follow the local legislation. It's based on where the employment contract is signed. And for example, if you are signing an employer contract in Hong Kong, then you definitely need to follow the Hong Kong government legislation part. And if you are signing a contract with China Mainland, then you are focusing on the China Mainland social benefit related part. And then depending on where you are retiring, you can enjoy the benefits from different locations.
What are some other considerations that employers need to remember when dealing with cross-border employees or expats, of which there are also many?
Basically, the Hong Kong government, they have an employment ordinance legislation that is used to regulate the wage to be preferably to be paid, how it should be paid, and when it should be paid. These are all regulated. So basically, the employment ordinance, of course, it says all the salaries to be preferably to be paid in Hong Kong dollars. But for expatriates, those are paid partially in foreign currencies. The employers, they must convert the foreign currency portion into Hong Kong dollars in accordance with the requirements of the IRD for salaries tax declaration. And also, this is a point that some employers, they may not be aware of, is IRD, they requires to use the fixed exchange rate announced by the Hong Kong Monetary Authority May 31st each year for the conversion in the next year. But if employers, they missed to use the correct exchange rate, then there will be some additional maybe administrative work they need to tackle with the authority, the IRD, because the tax calculation will have difference. Another point need to be aware is the housing allowance for expatriates in Hong Kong. Usually it is regarded as a taxable income, because the tax calculation method will vary according to the form of the housing benefits. So if an employer provides a residence directly to the employee, then the taxable amount should be calculated based on the rental value of the property. And if in another way, if a cash housing allowance is provided to the employee, then the full amount must be included in the employee's accessible income for salary tax calculation. So many employers have difficulties in distinguishing the tax standards of different housing benefits. For example, they may be confused with the serviced apartments, with hotel rooms, and applying lower tax rate by mistake, or failing to declare the full amount of the cash housing allowance, which will be held accountable by the IRD during their tax audits. So basically, these are some examples that we would think the employer must be aware of when they operate in Hong Kong.
Those are all very critical points. So how does ADP help clients in Hong Kong navigate all of these requirements?
So compliance is the core value of ADP. We have a virtual committee called the Legislation Committee. Their role is to monitor and collect those legal changes. No matter how small it is, they will use the technology and also the AI different way to collect those information. And also they work with the local vendors and local law firms to help them to analyze and to understand those legal requirements. And then once it is collected, our legislation committees, we will draft the communication with the clients and share those information with our clients in different ways, like the webinars or the newsletters, bulletins, these kind of measures. And also besides just to inform our clients of the legal changes, we also provide the ADP's insights and analysis of those legal requirements and also the actions that our clients need to take to be compliant to these requirements.
We are not only monitoring the feedback or the legislation update from the government, we're also trying to analyze and updating our product. For example, there are several updates, such as hourly rate was increased, and then we will check in our clients' database to see if any of our clients who has this kind of exceptional case, which has a lower hourly rate than the government. And then if it's already happened, on top of legislation mandate's information, our contact person will also call our client HR to remind them separately they need to follow this app.
That's really good to know. Thank you. We're nearing the end of the episode, but before you go, I'd like to ask you my favorite question. What do you love about working in payroll in Hong Kong?
For me personally, I like different cultures in Hong Kong because it is a labor market with a lot of experts. So when we are working with different type of culture, different type of people, and different type of industry, we really see, the benefits of being one part of the big world. So that is really a biggest part I like working in Hong Kong payroll.
For me, because, Hong Kong is a highly developed and mature market. So it's professional growth, the stable benefits, and also the dynamic working environment when I tackle with those Hong Kong clients. And also we see that it has very standardized regulation framework, the diverse career development opportunities. And the most important thing, I think, it is the clear and the standardized compliance environment. So it will reduce a lot of operational risks and also ensures the highly efficient, because in the payroll field in Hong Kong, it is governed by some very sound and rigorous laws and regulations.
Those are great answers. Thank you. We've reached the end of our episode. Jenny and Harry, I appreciate you joining us today and sharing your insights with us. It was really interesting to learn more about how tax and social contribution regulations are affected by cross-border employees and how Hong Kong compares to its regional neighbors. I hope you got a bit more insight into the intricacies of payroll and the labor landscape in Hong Kong today. If this episode has piqued your interest or your company is considering expanding into Hong Kong, please visit hk.adp.com to find out more. And don't forget to subscribe to learn more about payroll around the world with each new episode. You've been listening to ADP Payroll Around the World, produced by ADP and Story Things.